All right, perfect. Thank you so much. So good morning, good afternoon, and good evening, everyone, and welcome to episode 5 of the Defiant Optimist series. This is a program that we've been running since the beginning of the year, actually, that brings together some of the boldest and most innovative leaders who are making finance work for the 99%. My name is Sarah Tam from IX's Growth and Innovation team, and I'll be your MC for today. So 2021, it's hard to believe that we're halfway through the year, and as the world continues to grapple with this new normal, we at IX hope that you are all continuing to stay healthy, safe, and in good spirits from wherever you're tuning in from today. I actually had a quick look at our audience list today, and we do have a fantastic representation from different geographies and organizations, including USAID, McKinsey, DAI, SAP, and Resilience Capital Ventures. So many thanks for all of you for joining us today. I also noticed that there are a few new faces in the audience today, so let me quickly start off with an introduction to IIX. We are the pioneer in impact investing and the global leader in sustainability. Over the last 12 years, we've been working really hard to transform the financial system so that women, the environment, and underserved communities are finally given a voice and a value in the global markets. And that's exactly what this series is all about as well, which is connecting the back streets to the Wall Streets of the world. And to do that with us today, we're joined by speakers from IX, of course, and our partners from MarketAxess, and our featured speaker, Stephen Liberatore, who is the head of ESG and Impact Global Fixed Income at Nuveen. You'll hear from all of them in just a second, but first, let me share a few words on the tech side. So, of course, if this is your first time with us, you will be kept on mute throughout the webinar, but we do invite you to share any reactions that you have as you listen in the chat box below. Feel free to ask questions as well during the episode, and you can do that by clicking the Q&A icon to I think it's the right of the screen over here. Don't forget to vote for your favorite questions by pressing on the like button on all of these questions, and then we'll be sure to get to the ones with the most votes towards the end of the webinar. Of course, if you run into any tech issues, speaker audience, myself, otherwise, my colleagues Gemma and Jambi are always ready and on standby, so please do reach out if needed. That's all from me for now with my announcements, and I'll be back later on. For now, I'll pass it over to Professor Shanaz to kick things off and to introduce some of the guest speakers that we have today. Thanks.
Thanks, Sarah, many thanks to all of you for joining tonight, and of course to the amazing IX team. It's late at night here, it's 9 o'clock in the evening, so thank you very much to Sarah, Janvi, Gemma, and Natasha, and of course Shreya to be a part of all this. So very warm welcome to all of you, and thank you for joining our session. This is, as Sarah mentioned, this is our 5th session for the Defiant Optimist, and where we discuss how to make finance and business work for the 99%. As always, let me begin by introducing the series to those of you who are joining us for the first time. The Defiant Optimist is an online series at the IX Institute, as Sarah mentioned, which features exemplary leaders in sustainable business and finance. This is more than just a conversation, which of course I love having with my guests, between two people, but it's really a chance to dive deep into the stories of these people who have the power to impact financial markets and to make them work for everyone. And most importantly, it is the chance for you as the audience to find your own way and path in this movement that we are all creating together. This episode will be our last one sort of pre-summer, so we will be coming back after summer. So we wanted to use this opportunity to leave you with plenty of food for thought as you get vaccinated. Do get vaccinated if you have the opportunity, and go out and enjoy yourself in the summer. As many of you know, we have a long way to meet our 2030 Sustainable Development Goals, and now with COVID, sadly, even more so. However, we really can't lose hope, and we need to move forward, and that's what we do as Defiant Optimists. And even during this pandemic, at IX, we've been able to channel more capital than ever to women and underserved communities, leading the movement towards a sustainable future. Now, case in point, in December 2020, IX issued the Women's Livelihood Bond 3, the largest bond yet in the series of close to $28 million. Now, this bond, even as the pandemic continues in South and Southeast Asia, actually, across the globe in various stages, it is empowering 180,000 women on the ground. And of course, this is in addition to our Women's Livelihood Bond 1 and 2. I'm telling you all this about this issuance because even during the toughest time, we can still always push for the sustainable future through finance. And IX does it because every woman, wherever they are, and especially in the last mile, are the backbone of our communities and our communities' health, economics, and of course, climate action. Now, because these incredible resilient women, IIX will continue to be a bastion for sustainable finance and impact, and we will continue to lead the way to achieving the Sustainable Development Goals along with our amazing partners, many of whom are here with us today. Now, with this brief introduction, let me now pass the conversation to Natasha Garcha, Director in the Innovative Finance team, to dive a bit deeper into the Women's Livelihood Bond and talk about the exciting new developments as we're expanding our work into the Sub-Saharan Africa this year. Following this, we'll hear from our guest speaker from MarketAxess, and we'll be incredibly excited to partner with our MarketAxess now on 3 webinars. So thank you, Christophe. That really shines a spotlight on how capital markets can be used to drive gender equality for women around the world. Natasha, on to you.
You are officially Prime, and congratulations.
Yes.
I feel like I could see that 100 times and still be blown away and get very emotional. In 700 years of stock exchanges, we finally in 2017 had the world's first gender bond that was designed by a woman of color, Professor Shanaz, and listed on a stock exchange, so truly making history. What you see on the screen, if you would all click just a bit for me, should be a screenshot of the Bloomberg quotation actually for this. So whoever's controlling the screen, if you click, that would be great. And I think the big narrative we all heard during the pandemic has been the devastating impact on gender equality and how women have been 1.8 times more likely to lose their livelihoods as compared to their male counterparts. And the Women's Livelihood Bond has really sought to change that narrative by empowering women to build back better, recognizing that advancing gender equality can add $13 trillion to world GDP by 2030. So women aren't just victims, we're part of the solution. And so to date, we've mobilized over $48 million to the Women's Livelihood Bond Series to empower over 800,000 women and girls across Asia Pacific to build stronger supply chains, resilient communities, and secure economies. Next slide, please. So what's the IX-WLB series edge, if you will? In my opinion, it's the robust focus on balancing risk, return, and impact. So even during a pandemic, we're able to meet all our coupon payments. And a big part of that is because we're investing in women, which serves as a force to stabilize returns and mitigate risk, as we've seen in each of our 3 issuances that are on the market and listed on stock exchanges. For over a decade, IX has been at the forefront of the gender lens investment movement. And we use our digital impact assessment tool, IX Values, to make sure we're actually verifying the impact we report based on what the women on the ground are experiencing. So last year, whether it was a woman growing organic rice in Cambodia, selling marigold in India, or running a small business in Indonesia, we could still connect with them and amplify their voice, making sure it was valued using digital and mobile technology of the value chain. And this really has helped us not just give the WLB series an edge, but also to understand how the WLB series proceeds were equipping women to accelerate COVID resilience and economic recovery across emerging markets that we've invested in across Asia Pacific. And it's allowed us to share hundreds of data points with our investors from across the world on a semi-annual basis, so we can really make data and finance work for the 99%. And this commitment to fight the wave of impact washing and pandemic washing that is happening across the sustainable finance market has really set the WLB series apart. And the WLB series for this has won multiple awards, including the UN Climate Action Award, the UN Women Leadership Award, and the Tokyo Award for Best ESG Investment. Next slide. Could we go to the next slide, please? So building on the success of this, in 2021 Q4, IX will be launching the WLB4, and there's a play on the word, it's the WLB4 Climate. And this will be a multi-continent bond, the first multi-continent bond that we're doing in the social space, which will be, for the first time in the series, not just including Asian entities, but as Professor Shanaz said, also including entities from sub-Saharan Africa in the portfolio. Now, IX has been working in Africa for some years now, building the market and going deep through our research arm. So we're absolutely delighted that the WLB4 Climate will provide investors the opportunity to gain more exposure and to a more diversified portfolio than ever before. The WLB4 Climate, as the name suggests, will also make strategic investments in SMEs that are empowering women to mitigate or adapt to climate change in sectors like clean energy and agriculture. And we expect to mobilize about 50 million to empower about 500,000 women and girls to advance the SDGs, including 5 gender equality and 13 climate action. So as the world pushes on the race to zero emissions, IX wants to recognize the critical role gender equality plays in the Paris Agreement. So we're very excited to be part of the solution to the Women's Livelihood Bond Series. On that exciting note, let me hand it back to Professor Shanaz.
Great, thanks, Natasha. Just before we pass over to Professor Shanaz, just a quick introduction from our partners at MarketAxess. So once again, we're delighted to be collaborating with the MarketAxess team on our 3rd series together. And today we have Christophe Roupie, who is the head of EMEA and APAC at MarketAxess. He's here to share a few words with everyone today. So Christophe, over to you.
Well, thank you, Sarah. I hope you can see me and hear me. Greetings from a beautiful day in London for a change. So this is now the 3rd webinar in the current Defiant Optimist series where we are involved. And once again, I am honored that I and MarketAxess are able to be part of the conversation. And I hope that most of those listening will have had the opportunity to participate in previous webinars. And so I won't really repeat the full introduction and who we are and who MarketAxess is and where we fit into this discussion. But I will probably give you the short version, which is that we are a global bond trading platform and technology solutions provider whose infrastructure and data connects nearly 2,000 of the world's largest financial. So we very much sit at the heart of capital markets. And our role in this discussion is linked to our purpose. And because purpose is ultimately what this series is all about. And the Defiant Optimist series is built around purpose-driven leaders who make a difference to the communities around them. It is built around leaders whose purpose drives them to make a positive, long-lasting impact to the world around them, outside of the construct of their immediate day-to-day roles or circles of influence. The MarketAxess purpose reflects that ethos, to use our technology and electronic network to make global credit markets work better for the people who depend on them. And that is to making them more open, more inclusive, and more equal for the companies, for the institutions, individuals, and communities who depend on them. So our purpose extends much, much further than just outside our front door. And in the time since the first Defiant Optimist webinar, we launched our second annual ESG report. It showed that while we still have a journey ahead, we have taken some pretty big steps to achieving our purpose. And we have launched a series of programs designed to help lower our carbon footprint and to directly support wider climate change initiatives. We have taken steps to advance and improve gender equality in our own firm and also in the wider market. We have kicked off a range of projects aimed at meeting many of the 17 UN Sustainable Development Goals. And of course, we have partnered with IIX such that we can help in some small ways now to support this great initiative. So we still have a long way to go. I mean, intent and initiative are not nearly the same as a long-lasting impact, but we have learned a lot and we are still learning. It is small beginnings, but I am very optimistic that we really can make a difference in the long run. And we are committed to our purpose. So thank you once again to our partners at IIX, and thank you to all the speakers for giving us another chance to learn about what real impact looks like. So over to you, Durreen and Stephen. Thank you.
Thank you, Christophe, for those very, very kind words. It's really wonderful to see how MarketAxess continues to push the boundaries, and that's why it makes us very proud to be working with you. So just as MarketAxess, the Women's Livelihood Fund of IIX, and amazing organizations like Naveen are breaking barriers all over the world, I think we are in a very wonderful and fortunate position today to be speaking with our incredible partner from Naveen. So today's guest speaker for this session is Mr. Stephen Liberatore, Head of ESG and Impact and the Global Fixed Income at Naveen. So those of you who don't know, Naveen actually manages $1.2 trillion of AUM, and it's the largest teachers' pension fund in the US, and it invests in the traditional sectors such as real estate, farmland management, etc. But in addition to that, Naveen also is very much positioned itself as a leader and a pioneer in the sustainability industry, and is an investor, I proudly say, in the Women's Livelihood Bond series to bring financing to the last mile. So, big thank you to Naveen and also, of course, to Stephen, who made all this happen. And I have to emphasize that, it really is a big task for someone like Stephen to be able to push through an innovative product like this, in a fund which is very large and is responsible for many teachers' pension. So thank you very much for believing in this. And you are no stranger, I have to say, to breaking barriers, Stephen. So let's jump to it, which is, what are the most defining moments for a defiant optimist like you, where really you had to lead with that defiant optimism?
Thank you for having me. I greatly appreciate it, Professor, and it's been a pleasure and an honor to work with you and your team. To me, at least, in all the work that we try to do in the funds that I manage, where we are focused on a double bottom line of total return as well as direct and measurable impact and ESG leadership, your team really exemplifies what we try to find and partners we try to work with over time. And certainly there is that huge spectrum of where the investments we're making are at the moment, but you and your team are often used as our examples, when we're talking to other potential issuers about what it would take for us to participate in a transaction or the types of work or data that we expect to see from an investment that we're making that fits our proprietary impact framework. So thank you so much for all of the work you and your team do, and for having me today. I think what's really been interesting about the path that we've been on, and I'm fortunate because I work in an organization that has a long history of investing in a responsible way, regardless of what nomenclature we used. When I first started, it was socially responsible investing. Now it was responsible investing, and now it's ESG investing and impact investing. So I've been fortunate because the historical basis, as you pointed out, of our organization has always been professors, academics, doctors, people who really were at the forefront as an investment community of looking at responsible factors in their investment, in their investment portfolios. So, we've been able to kind of take that, I think, to the next step as we're able to expand out and work with high net worth individuals, state plans. As a former altar boy, I have a couple of nuns' retirement systems that are, invested in what we're doing. So it's a very broad base of investor, and that's really been driven by what we've been able to derive from the market. We have been doing this, running an active total return strategies for myself. We have a 10-year GIPS compliant track record. So we have the ability to show long run results because, as you know, as we talked about many times, within this space, the main misperception is you must sacrifice performance. And that's just simply not the case anymore. And I think once you're able to provide long run data and do it in a way that's comparable to, in my case, other core bond funds that just aren't using ESG criteria, making impact investments, you're able to start indicating to investors that there isn't that give up. And if anything, especially within fixed income, managing this way actually is a positive. It's when everything we've talked about, over the time and what you're doing with the WLB series is about sustainability. And sustainability on our side in the investment community, if we're doing it right, the way we look at it is sustainability transfers into more stable, long-run free cash flow generation, which makes that borrower a better credit risk. And on the fixed income side, how we generate outperformance isn't by picking winners, it's by avoiding the losers. And over time, those losers are ones that tend to be less sustainable. They tend to be less focused on longer run impacts, broader risk profile, risk to their own business operations. And as such, that focus has allowed us to generate good long-term results with direct and measurable outcome, which I think is very attractive to a wider and ever increasing range of investors.
So Stephen, let me sort of go deep with that. Of course, these are all music to our ears. But interestingly, as you know very well, this narrative is not something that is, I would say, widely used, right? So this obviously, even for Naveen, this was a journey. So how did you make this shift sort of the traditional, what's seen as traditional investments, where there's a, underlying sort of risk aversion, if I may say so, and moving into something where you show that, it's not that we're taking more risk, it's more like we are actually being sustainable, which is bringing the risk down. So we're still the same. So that's what I'm hearing that you're saying. Now that we love it, we absolutely love it. So tell us the secret. How did you do it? How did you get your folks to sort of really go behind this?
Yeah, I think that really what really transformed it for us was the ability to. When I first started, I was brought in to manage on our pension side of our business, where we provide pensions. We have an annuity product that's called the Social Choice Account. And that is a 60-40 balanced account that we have had as a firm for, since 1990. And that is one of our larger annuity products. So when I started, had about $4 billion in fixed income assets. So again, it was obviously an important consideration for our firm and something that we focused on. But what really transformed it was the ability to take what we were doing there and find true third-party investors. So we've been fortunate. We have one family office that we started a separate account with based off of what we were doing more than 10 years ago. And that family office then allowed for us to show through third-party returns, and then we were able to kind of go from there and show here are the results, which are good. Right. And oh, by the way, with those results, we're going to provide to you an annual impact report. And in that impact report, you as an investor are going to see not just your financial results, but you're going to see a very detailed breakout of the 4 thematic areas that we invest in, the tie to the SDGs, the dollar amounts, the key metrics that we are achieving. And I think the one that really helped most people was we were able to create an equivalency style. So when you look at some of the data, as you well know, when you look at some of the impact data, it can be very obtuse, right? Is investing in renewable energy projects that generated 541.9 million megawatt hours of power last year. Is that a lot? Is that a little? I have no idea, right? But when you're able to take that and say that's enough power for 24 million average U.S. homes for 1 year, it gives you a sense of the magnitude of the benefit you're having. And so then investors are able to look at it and say, well, I'm generating good returns. I'm not taking excess risk. And oh, by the way, I also have these metrics that I'm able to see how my investment dollar is being used and how that capital is being deployed. And I think that, to me, is the underlying source of really ESG and impact growth on the AUM side, is that at this point in time, investing in an ESG or an impact strategy is almost the purest way for an investor to control how their capital is being used. Right. And that is a very much of interest to the end investor.
So that's interesting. So I think, and this is again for our audience, I think this is an important point that's just made, which is if you are in a fund, it almost sounds like what you did very effectively. You created this sort of a side little fund with, it sounds like family office funding. And that sort of allowed you to sort of create that track record. And at the same time, being able to connect the story and actual real output and outcome to the investment. So these are all very, very valid points. And it's very interesting to kind of see that your investors, which are literally, I would say, millions of teachers, so they are actually understanding this and they're not finance jocks, right? So it really is, it is for the 99% and they represent that and it's their money. So which is absolutely beautiful. So now moving on to next topic. So we tried to do this conversation around sort of a broader theme of relief, recovery, and resilience. And once again, because we are now in a very, very unique time and impacting all our lives. So speaking of teachers' pension, if you're talking about the topic of relief, the education system in the U.S. really has been acutely affected by COVID. I mean, along with many other countries, but in the US. I mean, again, I spend most of my life there, and it breaks my heart to see all my friends with their kids, from, sitting in front of the computer. Now, with 27% of teachers considering quitting their jobs, as they're saying, because they're still unsure whether they're going to go back in the fall due to stress from the pandemic. I mean, how is Naveen pushing sort of the equitable and sustainable recovery to support teachers and stimulate sort of the economic recovery in the U.S.?
Yeah, absolutely. So a lot of what we do, and I mentioned, that the way that we manage is through, and I manage 17 mandates at the moment that aggregate up to about 17 billion in total assets. And we focus on two concepts. They are they are related, but they are distinct. ESG leadership, where we're finding and investing in those issuers we believe are true ESG leaders on a relative basis. And then impact investments that have that direct and measurable societal and or environmental outcome associated with it. So one of the things that we've been very active in has been in the development, obviously, that the WLB series represents is the growth of the social bond market. And what we have seen has been an increased focus, especially here in the U.S., from issuers transitioning into that social bond market or sustainability bond market, where there's a combination of social projects and environmental projects that may support and enhance one another within the transaction. But we've started to see growth in opportunities that I think speak to why a teacher at this point in time may have underlying stress, right? It isn't necessary. Most teachers love their jobs. That's why they become teachers. And where their stress comes from, what we have found, has been on the financial stress associated with being a teacher, that it's not as highly compensated as it should be, certainly for the importance that they bring to our society on a daily basis. So what you started seeing were opportunities to invest in transactions where the underlying causes of that stress are being addressed, where there's potential for a more affordable housing or housing relief, opportunities for increased access to healthcare, or increased access to financial flexibility, things where you can maybe get more time on a bill. And that is really, we've seen, or increased time to pay a power bill, for example. So we've seen, a variety of transactions that deal with that real underlying sense of stress for a teacher, so that hopefully, they remain a teacher going forward, because they recognize that their ability to live and to meet all of their obligations is supported. And these transactions primarily driven from financial institutions, large financial institutions, who have that access to the end client and the end customer through, student loans, mortgages, and utilities through power bills, water bills. You're starting to see those types of investments come up. And I think that's helped, I hope, at least for those people that are impacted, to feel some sense of relief and not feel as though that things are becoming too stressed for them to continue into their preferred profession.
Right. Yeah, I mean, and that's a great way of looking at it, because again, I mean, there's so many other elements that comes in, and if you can create some relief around that, I think that definitely allows for the teachers to at least worry about one less thing.
Well, and the other thing is, right, I mean, you even see it where when you talk to teachers, what we have found is that even access to internet and high speed internet, is a key lacking factor in a lot of parts of the U.S. and globally, especially in more rural parts of the world. So seeing transactions that may address that inequality in access to broadband, is also certainly a positive that I think hopefully also reduces that stress for a teacher.
Yeah, and it's amazing that digital divide, I think, still very much continues, despite these tech companies taking over our lives. But that's another discussion altogether. But speaking of the rural areas, now interestingly, when we were doing the research for this conversation, one thing that I was very surprised to find out that Naveen is one of the largest investors in farmland. So, which is quite remarkable. And interestingly, again, I mean, globally, we see that 70% of smallholder farmers are seeing significant less income, obviously, from pandemic. I mean, everyone is, but I mean, they're getting, of course, hit as well. And financing has also become an issue for the smallholder farmers. And like in India, which obviously is just going through an incredible challenge. I mean, we're seeing that the agriculture sector is contracting, rapidly. So, as the #1 sort of manager of farmland globally, again, I say this with some hesitance. I don't know if that, I mean, I was quite surprised to read that. I was like, whoa, that's incredible. It looks like you have 2.2 million acres of farmland in 7 countries. So what is actually Naveen doing for the smallholder farmers, supporting their communities this really sort of tumultuous, rough year?
Yeah, unfortunately, that is handled by our real estate and our alternatives team. So I don't really have a lot of specifics about what they do, but I do know that they are very focused on, just from, interactions that I see and, emails that kind of go back and forth. Right. I do know they're very focused on sustainability and working with, local farmers and local, local populations, the details of which, unfortunately, I don't have.
Okay, no worries. Yeah, I think we were just so excited when we saw that. We're like, oh my God, because we spent a lot of time, a lot of work in the agri sector.
But for myself on the public side, one of the interesting deals that we have worked on and transactions we've worked on has really been with Starbucks. Starbucks has issued a couple of sustainability bonds.
Yes, they have. Yeah.
And those bonds are really interesting to me and unique because what they're doing is really addressing the issues that you brought up specifically, like that obviously the majority of the proceeds from those transactions were to go to purchase organic coffee beans. And there's a couple of benefits to that, obviously. For the local farmer, the organic coffee bean is, generates a higher price. So, better cash flow for the local farmer. But what also the transaction had done was provide funding for a handful of educational centers that Starbucks built, and then had the local farmers come to learn more sustainable farming practices, so that those farmers could learn how to grow more sustainably, so they could grow more organic coffee beans to sell at a higher price to Starbucks. And it also, part of those transactions also were to provide financing to the local farmers, because of exactly what you said, that a lot of these areas, these are obviously more rural countries, and the farmers are obviously working in rural areas, and they had a lack of access to financial products, and certainly financial products that were affordable to them. So that program, I think, also helped that local farmer by providing more affordable, reasonable, accessible capital to the farmer. But they're creating somewhat of a virtuous cycle, right? Is that if I'm going to lend you money, at an attractive level to you as the farmer, but I'm also simultaneously helping you learn how to grow more sustainably, then you're going to benefit as the farmer by being able to sell more organic coffee beans. So
Stephen,
to
were you one of the investors in this bond for Starbucks? You were one of the investors.
I'm sorry?
Did you invest? Did
Naveen invest? Absolutely. Yes, we did.
Okay. And then how was on the impact side? Did you actually go deep with that? Because I heard some noises about it, so I'm just curious.
Yeah, for us, what we did was we talked to and worked with Starbucks prior to coming to the market, and for us, we look for that direct and measurable. We're a use of proceeds based, lender on the impact side. So we required from them very concise, clear use of proceeds language, and then we required impact metrics coming back to us in the form of how many pounds of organic coffee beans were you purchasing? How many farmers, how many education centers did you build? How many farmers were trained in those education centers? And then, how many farmers benefited from the capital that you were providing? So trying to get from them, the data that we believe would represent how that capital was used in a way that we believed tied to how we know our investors want to invest.
Right. Now that's, it's an interesting way of looking at it. So I think, and that's why I think let's moving on to our next topic. in terms of sort of really focusing on the recovery side. I mean, we see that, obviously both IX and Naveen, we are not, we are very brave organizations. We are not afraid of financial innovation and doing things in a new way for sustainability. Now, interestingly, for ESG, if you look at ESG and all the rage with ESG, it has really taken off. But the reality is, it's a little bit of checkbox approach, So in other words, like ESG is really known for risk mitigation and really being able to avoid, any kind of fallout, I would say, from the consumers, rather than actually looking at creating really positive impact and really sort of seeing what's the impact on that life. It's not just how many farmers came and got educated, but was there actually any improvement, in their livelihood? Were they actually being able to earn better money? Were they actually able to get better access to education and health and, better seeds, and which were giving more yield? So really the outcome is, of course, as you know, we focus on. So we go really, I always like to say, we are perhaps maybe too deep with our impact, but we will never give that up. So, and we really, really focus on that positive side. So I'm curious to hear, as someone who obviously you are heading up the ESG and the impact at Naveen, but the two terms are often confused, So someone like, say, IX, we're not getting any extra brownie points for going deep. And we are compared against folks who are just checking off the boxes, and really focusing on the numbers, whatever the companies are saying, instead of really looking at what's the impact in the last mile. So how can we look to investors and pioneers like you to ensure that, we can actually start pushing this whole narrative of ESG to that really makes a difference in people's life and in the climate, rather than just have check boxes? What do we do?
Yeah, I mean, that I think is the eternal problem, and I think that it is one where we continue to be on, a journey through it. As I mentioned, earlier, that there is a wide spectrum of the investments that we work on and invest in, from what we get from them. I think, again, as I mentioned earlier, for the WLB series is clearly the gold standard as far as the depth and breadth of impact data that we receive. We also, though, are practical and recognize everybody is probably not in the current position to be able to provide that level of data. But that doesn't mean that we don't continually work with issuers to try to get them to there. Like, it is a path that they're on, and trying to continue to push and work with investments and work with issuers to get them to understand that it's a continual improvement that we're looking for. That, today we may expect you just to provide us, I think of affordable housing as a place where we've really seen a lot of growth over time in the quality of data that we receive. It started off as just simply, okay, we provided, 500 affordable housing units. Well, now what we require and look for from the issuers is, well, who are the beneficiaries of those 500 units? Is it seniors? Is it women who are surviving, or escaping from domestic violence? Is it people who have had, substance abuse issues and they're now in recovery? Those types of additional data points, and then trying to get a better sense of, kind of the gender as well as racial makeup of the residents in these affordable housing units. And that's been a certain change that we have seen over time, for sure. And I think, go ahead.
Stephen, just to interrupt, just to kind of take that tiny bit further. I mean, but then that's again what the company is saying. How about actually asking the beneficiaries, right? So I think what I'm trying to get at is perhaps a little, self-serving, and I'm sorry, it is our show, so I need to be a little self-serving. But how can organization like IX, where we are so committed in making sure that the last mile, the women's voice, the underserved communities, all of their concerns are actually voiced and verified and accountable, and reflects, in the company's performance. How do we make sure that the market rewards that? So should the market be rewarding something?
In my opinion, yes. And I would say in the instance, and we'll use the WLB series as an example. If I would say if you did not as a team go to the level that you did, I don't believe we would invest. We would not have been an investor in that particular program, because
really,
that's
but you
the type.
invested in other things without that last mile.
Right, exactly. However, that was because those programs may have been larger in scale, so it may have been more of a focus for us on seeing that if we worked with, a Starbucks, for example, right, or a state, the California State Housing Authority, where working on affordable housing, we knew how many particular transactions were behind it, and the scale of that, as we work with them, we would be able to build it out into something even larger. So it's a relative assessment, and what I think the goal really is to, for those issuers that have the ability to have the data that you have, for example, and being able to report on that, and to us, that is exactly what we're looking for. I use the WLB series as an example when I talk to just about every issuer that comes to market. I say this is the gold standard, because most of them will ask me, okay, when you're talking about data, what is it you're looking for? So I use you as an example, or the WLB series as an example of the depth that we're looking for. But I almost view what you're doing almost as the perfect, but I don't want that to be the enemy of the good. And I think, unfortunately, we're unfortunately in a position right now, and we're starting to see this more, that at this point in time, the person or the entity in the best position to give us data is really the issuer, right? And we do things through our due diligence process where we're going to reach out and talk to an end beneficiary. I'd like to do more of that for sure than we currently do, but we're a semi-small team, so we don't have the ability to kind of double check all of that, but we try to spot check and determine that what we're getting from the issuer is legitimate, at least from our work. But I recognize, I think that I want us to be in this evolutionary process, because what I try to remind everybody is and everybody kind of points to the green bond market, right, as kind of the first evolution of impact in the public market, right? That's not even 10 years old. Well, it's a little more than 10 years old, but it's an up credit cycle and product, and not one that has a tremendously long history in fixed income. So we're still evolving over time, and things are getting better, and we're starting to see more transactions where we're getting second party validation of the impact metric, or we have a second party generating the impact report for the issuer, so we have that additional view into what's going on, and it's not just simple.
And that's kind of interesting. So there are two things I will say. So I will share a secret with you, which is, guess what? Everyone actually can measure the impact of the last mile and get it verified.
Absolutely.
What you need to do, Stephen, so I hope you can do this for us, which is refer them to us. So the gold standard can be replicated because we have the technology to do it. So we have IX values, which actually is the technology that we use for the impact measurement. Now, in terms of the verification, and again, I just want to sort of make it clear for the audience, I think it is very important that we also understand the verification when it happens, that the people, the verifiers, are actually cognizant of, again, the folks that we're talking about, the last mile and the impact. And unfortunately, a lot of the verifiers are sitting in the big cities in the West, and a lot of times has very little understanding. And also, the race plays I would say, a big part in it as well. I mean, I have had folks, who are working in New York come to me, and the entire team, they have no idea, what anything works in Asia. They probably came here and stayed in the top hotels. I mean, that's not how it works. So I do think that we have to have an understanding and empathy in terms of, how all this is done. And please, please, please do, spread the word about the fact that gold standard can be replicated. So I think with
that's absolutely true. I could not agree more.
Right. Good. And I'm really glad to hear that. So just moving on. So I think kind of the last part, what we talk about in our discussion is about resilience. Now, just last month, Naveen announced the first impact investing focused fund to be listed on the New York Stock Exchange, which is absolutely brilliant. So massive congratulations on that. So while it's really momentous and it's really an accomplishment of building resilience, so how is Naveen going to deploy this fund and make sure, again, sort of all the people we've been talking about are represented 99%. So curious to hear the plans with it. What are you going to do with it? Please do share.
Absolutely. Yeah, absolutely. So that would be our closed-end fund, and what we're targeting there is, as I mentioned, our focus in my strategies are on ESG leadership and impact investing. And what we've really done with the closed-end fund is kind of flip that around.
Right.
Historically within the strategies I'm managing that are multi-sector and investment grade, we roughly run a 60% ESG leader, 40% impact, roughly 60-40.
Okay.
What we're doing with the closed-end fund is we're kind of flipping that to be more 70-30 impact ESG leadership. And what we're also doing is focusing more on the lower quality part of the credit, the credit spectrum.
Okay.
And what we're trying to do there, again, the purpose of a closed-end fund for the most part is to generate yield, and yield is the main part of return.
Right.
And so what we're doing is kind of focusing really on that kind of triple B and lower, not investment grade, not rated, and trying to identify investments that kind of fit that. And there's going to be very high overlap with, what I already own in other strategies and what we'll own in other strategies.
Okay.
But it's really just kind of a flipping of it and a more concentrated approach on lower quality, unrated type of investments. And I think it'll have more of an emerging market kind of focus to it, just because of what we're looking for within the market. And I think that, it speaks a little bit to what you were just saying as well, working with issuers and trying to get them to understand what's needed is obviously the emerging market space is one that's, evolving even more rapidly than what we're seeing in the developed markets. And I think it just takes a lot of work and a lot of effort to engage with issuers, which myself and my team do, consistently. We had 84 engagements last year. We've already had 56 this year. So you just see the rapid growth of opportunity and trying to continue to push through, that, just because we've talked to you as an issuer 5 years ago and talked to you then, we expect that your data will continue to improve over time to be reflective of the additional need that we're looking for, but also recognizing not everyone is there yet. So we want to, again, the perfect can't be the enemy of the good, but we want to take the good to the perfect on a continual basis so that over time everyone improves and we just get better quality of data. And that really just comes from interacting and engaging with the issuer.
Right. No, that makes complete sense. And I think my biggest takeaway from all of this is that IAX is the gold standard. So we are going to say that to all the institutional investors we talked to for WLB4. So which is absolutely
and I'll flip it, and I will flip that around. Then when you talk to them, you can refer them to me and us if you would like a reference. So there you go.
If you don't believe us, just ask Naveen.
Talk to us, exactly.
So with that, let's move on to the lightning round because we have a lot of questions, I've been told, so I need to wrap up. So this is the fun part. This is what I wait for with all my speakers. So we have to do this very fast. So what is one word that defines you?
Oh, man. Wow. I think I'm optimistic. Yeah, optimistic.
Oh, good. I like that. Yes, and you're a defiant optimist. What book are you reading right now?
I am reading a book that's based on it's a behavioral finance book talking about of course it escapes my name, or the name of it escapes me, but it's based on cognitive dissonance and why we make bad decisions as humans.
Right. Just to sort of make sure that you're making all the right decisions.
Or try to make sure I identify all the bad ones I'm making.
What's your hidden talent?
Oh gosh, I'm a very good softball player.
Oh wow, okay, that sounds like fun. So when you're not working, what do you like to spend your time doing?
I like to travel and I like to read and spend time with my daughter.
Oh, that's nice. She's a lucky girl. And what is your reason to be optimistic in 2021?
I think that the best reason is I think 2020 really showed investors and the market as a whole that there is true financial benefit to ESG and impact investing, as we saw during, last March, April, May, during the COVID decline in the market, and how ESG impact funds outperformed. And I think that was kind of a real turning point for the market to recognize that there is financial benefit to approaching portfolio management with ESG criteria, with an impact investing lens.
Right. And I think to add to your reason to be optimistic, we are coming out with WLB4. So
That's right.
another bond for you to invest in with gold standard. So which is fantastic. So with that, Steve, I want to thank you. This was really so much fun. Thank you so much for taking the time. So now I have to really look at the questions. So please do look at it. It's a button on the right. If you click it, so there's a whole bunch of questions here. Let's see. Sarah, are you going to help us? I think you have been looking at it.
In there. So like I said before, we're going to hit the ones with the most likes. So there's two questions there. First one to you, Mr. Liberatore. Does Naveen have its own internal ESG matrix for potential investments? If so, which areas does it specifically focus on? And does it currently have a mechanism to standardize and compare impact across their multiple investments? So three-part question, over to you.
Sure, no problem. So for us, in the way that we adopt ESG leadership, we actually take a two-cut approach to it. So myself and my team we have a separate responsible investment team here at Nuveen, and we work with them, and then both of us work with third-party data providers, in our case, MSCI, Sustainalytics, Bloomberg, Barclays, to create an eligible universe that is reflective of the criteria and the concerns and the issues that we focus on and believe are relevant, and then working with those third-party data providers to create, through their work, an eligible universe that they believe reflect our concerns and criteria as true ESG leaders. That's our starting eligible universe. But then our internal research team, and we have more than 50 analysts, they have more than 13 years of experience, so they're true fundamental research analysts, also adopt and assign an ESG rating to all of the investments that we make. And they do it in a leader, neutral, or laggard criteria. So effectively, when you look at my strategies, what you would see would be eligibility within our ESG universe for those ESG leaders. Our impact investments don't have to be from an ESG eligible name because we're focused on the use of proceeds in that direct and measurable context. But on the ESG leadership side, what you would see is an eligible name and then likely leadership from the internal ratings analyst or a neutral at the worst. And if we ever do get a laggard from our internal analyst, what we then do is utilize that as a trigger for us to have an engagement with whoever that issuer is to find out what it is that maybe in our minds is lagging, even though they're in our eligible universe, but our analyst has pointed out some concerns, and we try to engage with that issuer to find out what the path is to correcting that. And again, we focus. I've always said this. I think all good analysts have always done ES and G analysis. It just was never called out as something different, right? Like if you were an oil and gas analyst, you absolutely knew what the environmental track record was of the companies you were covering, because that had a fundamental impact on their free cash flow generation going forward, right? And those issuers that had a poor environmental track record lost more business. They didn't win as many contracts. They had larger, fines associated and larger costs, so they weren't as attractive. Every issuer, every analyst has always done governance analysis, right? We want to know what your accounting track record is like. We want to know what your oversight is like on your board independence. And I think every analyst has really done social criteria as well, looking at diversity of the boards, diversity of the workplace, how those issuers treated their employees. And so that was always done. It just was never so identified specifically. So for us, all of that is done for all of the issuers. And obviously, depending upon what sector that issuer is in, you have different, more competing, more focus on maybe one of the three or two of the three, depending upon what business that they're in. And compare impact across our multiple investments. I don't think that we're at a state where we're comparing impact. We're measuring impact, certainly, in all those investments that we make that we feel are impact investments that fit our proprietary framework. And I would say on an intra basis, right? Like I think we'll eventually get there, but we're not there right now. Like, we're not saying, okay, we're looking at 2 solar power projects, or we're looking at a solar power project and a geothermal project. We're going to decide which one is more impactful, right? That, which one provides more power, per investment dollar, or is, reaching the most people or whatever. We're not doing that because we believe at the moment those 2 investments are positive for the environment because they're going to replace fossil fuel, because fossil fuel remains the dominant source of power generation. So I think sometime in the future, but it's probably going to be well past me being here, we probably will get to a place where we'll start looking at effectiveness and efficiency of renewable energy projects as an example to make a determination, but we're not there yet.
Great. No, that's really interesting, and sounds like you guys also have a really robust process as well. We are past time, and I am aware that it's the beginning of the day for you as well. So if you have time for one more, we can go for it.
Sure.
If not, yeah?
No, absolutely. Happy to.
All right. Great. Then let's go for the second most liked question, which is, it's often believed that investors don't actually care about the impact created. Is this true in your own experience? And how do you build, or how have you built, a case for investors to care about both financial and impact metrics?
Yeah, it has been my experience that for the strategies that I manage, the vast majority of investors actually care about the impact being generated. And one of the things that attracts them to our strategies is thankfully good long run performance, but also that impact reporting that I mentioned, where they want to see that. They want to see how that capital is being deployed and what outcomes are associated with it. But interestingly, it's a great question, because I do actually have one investor in a separate account that came to us kind of unsolicited and basically had just looked at the way that we had been running our core strategy, which is the core impact bond fund. And they viewed that as a really good, just core bond fund. And they liked that it looked a little bit different. They liked the risk metrics associated with it. And so they put it into one of their managed portfolios for their clients. And what was interesting was that they had indicated to us at the beginning, they never wanted us to talk about ESG. They never wanted us to talk about impact. They just simply liked the way the fund was run as a core bond fund. I'm like, okay, it's your money. That's fine. But this is how we're managing it. I just want you to know that.
Right.
Absolutely. We understand it, but we don't want you to talk about it. Okay. I go to the first board meeting for this organization, and I had only interacted with like 3 or 4 people. I get to the board meeting, and I start talking about the strategy, and the head of the board stops me and goes, understand, that's great, thank you. Can you talk about the ESG and impact criteria, because we as a board are really interested in that. So I had been talking to people who had downplayed the importance of ESG and impact, but then when I got to the board, they were like, oh, that's all we want to talk about because it's important to us. That's all we talk about now is, that's incorporated into our conversations around performance, what we're doing on the impact on the ESG side. So I think it's just been a evolution, again, we just can continue that word, of investors recognizing you don't sacrifice performance to be a responsible investor, and that there are alternate benefits to it from both a risk reduction and that direct and measurable process.
Right.
Well, Stephen, I hope there's more investors like you and Naveen on board as well.
I think second that, absolutely.
Exactly. Any final words from either of you today before we wrap up?
Well, I want to thank Stephen again. Really, you have been such a supporter, such a pioneer. Keep up the great work, and thank you for the optimism and the belief. And thank you, to the audience. You have been amazing, and of course to the my awesome IX colleagues. So thank you very much, guys. Really late. And for all of you, have a good summer, and I will hand it over to Sarah to close it up.
Great. So thank you so much, Professor Shanaz. Thank you so much, Mr. Liberatore, again for tuning in and for joining us today. It was fantastic. So whether it's your morning, evening, afternoon, both for speakers and for the audience, many thanks for tuning in and joining us on this session. A quick announcement on my end before we wrap up today. So we did a lot of talking about impact measurement and ESG. So if you are looking to dive deeper into the space, and start to debunk some of these things that you're hearing, then definitely join us over at the IX Institute for our upcoming Impact Measurement Masterclass. This is your opportunity to go beyond this ESG alphabet soup and really learn how to measure, manage, and analyze your impact data across your investments, your portfolio, organization, or project as well. This course is taught by Professor Durreen Shanaz, so feel free to reach out if you have any questions. We do have a special discount for everybody who is attending today, so we'll share that with you more likely tomorrow morning on in our time. So that's all from me and the team. We are taking a break over the summer, so stay tuned. We'll be busy preparing for the next series and the next few episodes that we'll be running back in the fall. So that's all from me and the IX team. So big thank you once again to all our speakers, our audience, our guests. Have a great day, have a great night, and have a great time.
Great, thank you. Bye-bye. Thank you to MarketAxess. Thank you.